Hi everyone and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. And tonight we're going to focus on why Beyond Meat keeps falling down. The last couple of months, Beyond Meat really hasn't had an easy time considering the Q3 earnings. And now they just keep falling more and more down. And what could the reasons be for that? Well, it seems that an analyst from Piper Sandler has downgraded the stock, and that's what we're going to talk about tonight. But also, are there other reasons why it's going down, and should you be buying the stock at this moment? And before we get to it, I would really appreciate an early thumbs up since it does help the algorithm spread the message. And also, if you're not part of the channel and you want to keep getting information and analysis on Beyond Meat and other plant-based companies, please subscribe. Thank you guys, I appreciate you. Now, if we take a look at the stock chart, ticker symbol BYND, we can see that from yesterday, it dropped almost 7%. Luckily, right now, before hours, it seems to recuperate a bit around 1.5%. We'll see what's going on. Yesterday, we found out that the investment bank Piper Sandler downgraded the stock price of Beyond Meat to neutral, which means that it's down to 125 estimated price, according to them. So what are their reasons for this? Well, there are different ones, but one of the main one is, according to this article, Beyond Meat is losing momentum and failing to capitalize on this emerging market as well as might be hoped. Fourth quarter 2020 earnings aren't due until March 1, but already the analyst warns Beyond Meat's retail momentum lags consensus expectation in the quarter, putting the company at risk of falling short of analyst estimates for both sales and earnings. Most analysts seem to believe from fiscal year 2020 that Beyond will do about $400 million in revenue, whilst Piper Sandler believes that they won't reach above $395. But more importantly than that, Piper Sandler don't believe that Beyond will do as well next year either. They did expect them to have a sales for about $670 million, but they've downgraded it now to $590 million. And the overall consensus among analysts is $630 million. And I do believe there's a chance that that is one of the bigger reasons why it dropped about 7% yesterday. People got afraid when they saw that and they start pulling their money, waiting to see what the next earnings report will say. But it's important to know that not all analysts feel this way. One of them, Rebecca Scheunerman from the Morning Star, is cautiously bullish on Beyond Meat, and she has put a fair value of $146. And according to her, quote, given the rapidly changing marketplace, we think it's too early to tell if Beyond's first mover advantage will result in a sustained market leadership position. Until we have better visibility on the strength and durability of Beyond's brand, we don't assign Beyond amounts. But again, as we said, she is still quite optimistic. Quote, we're still optimistic on the prospects for the meat-like PBM market. We expect a primary growth driver to be the 20% of consumers willing to adjust their habits to benefit their environment. Beyond's product emit 90% less greenhouse gases, require 93% less land, 99% less water, and 46% less energy to produce than their meat equivalents. So I think it's encouraging and positive that other analysts don't have that grim view of the company. And I think we need to remind ourselves of that. That is usually the negative aspects, even if it's fewer people who believe it, that usually that's the voice you hear the loudest, right? As I think many of you are accustomed to, I keep comparing the company to Tesla. And I see a lot of similarities here. For years and years, a lot of Wall Street analysts kept being negative and kept hating on Tesla because they didn't really believe that they would ever deliver, that they weren't able to compete with well-established companies within the car space. Yet today we see, after years and years, that today they've actually overtaken the whole space. And funnily enough, just in a amount of a half a year, several analysts now have a consensus that Teslas should be around $600 to $700 just all of a sudden. So basically, they changed their mind quite quickly. And that's what I expect will happen with Beyond Meat in the future as well. And we have to realize that, as with Tesla, a lot of these analysts, they viewed Tesla as a simple car, viewing it with old-fashioned eyes, the way it should work in the car space. But as many of us might know, Tesla is so much more than a car company. One would probably say today that that's actually the smaller part, considering that it's a software company with a lot of different applications. And in my opinion, a lot of these analysts, they don't really see what I see, and I think a lot of you guys see, that Beyond Meat is here to stay. It has a future. It's not about making money. It's about combating the environmental issues that we have on the planet. And their overall target is the meat industry, which in their view and my view and a lot of researchers' view is the biggest problem for sustainability. And to fight that and combat that, they're going to use their brand awareness. They're going to use the research that they keep pulling in money into. And eventually, I do believe that Beyond Meat will create a product that is cheaper than the actual real thing. And as we said before on this channel, that will be a game changer. Now, there's something else also that just recently happened that could be related to the quick drop in the stock, which is that there's a new company emerging called New Wave Foods that's launching a plant-based shrimp. And I imagine that there would be a lot of investors out there that could be scared off that there's another plant-based company emerging that's going to IPO soon. That could be a threat, a potential threat to Beyond Meat. But after looking at this interview with the CEO, it is quite clear, just like Impossible Foods, that she is not at all interested in competing neither with Beyond Meat or Impossible Foods, considering that she's not even targeting the same space, which is meat. She basically wants to become the master of the seafood market, and that's her whole thing. She believes that Beyond and Impossible Foods have paved the way for plant-based companies, and she has nothing more than respect for them. So everyone, what's your opinion on this? Why have the stock dropped as much as it has? Could it be related to the recent downgrade in the stock price from Piper Sandler? Could it be that they have more competition from New Wave Foods? Please give me an opinion. Now, I just want to make it clear, I understand the emotions that a lot of you investors out there must be feeling, right? I'm also heavily invested in Beyond Meat, and it is a scary thing for most people to see that it keeps going down, keeps having these red days over and over again. But for me, it's a simple fact of asking yourself, where do you see Beyond Meat in 5 to 10 years from now? Where do you see this space? Okay, we're talking about the plant-based space. For me, it's quite clear, considering the state of the planet, and that it's getting more and more obvious that it is the meat industry, it's the dairy industry that is the biggest culprit. That's research that's been made by the UN for 15 years now. And as soon as this gets clear to more and more people, we're going to see some huge changes in consumer habits. So I'm not at all personally, in my opinion, worried about the stock price at the moment. Again, if you're looking from a 5 to 10 year perspective, guys, this is shopping time, right? This is the time that you go and buy more. I've talked about this on this channel before. I think there's a possibility that the stock might go down under $100. And the reason being the whole Roni Rona situation, right? So it's not surprising at all. And it's not surprising that there'll be analysts who starts panicking and downgrading the stock. It might be more and more that'll do that. But that personally shouldn't let you lose your conviction. Because if you really understand the company, guys, if you do your due diligence and look at the fundamentals, yes, the economics of the company is part of the fundamentals, right? But Tesla is a company that almost bankrupted a couple of years ago, right? It always had money issues. It kept losing money for years and years ahead. Yet, look at where they are today. And in the plant-based space, I would say Beyond Meat is equal to Tesla and actually challenging a huge and old way of seeing the food industry. And I think they're going to succeed really well. Guys, that was it for today. I hope you found some value in this video. I hope some of you feel a little more relaxed at the moment. And if you did find some value, please, guys, hit that subscribe button and be part of this family. And obviously, I would also appreciate a thumbs up. As always, guys, I just want to remind you, always do your own due diligence. I'm not a financial advisor. These are just my own personal thoughts and ideas. All right? So please have a good day. Hope to see you soon. Peace out.